Hello everyone and welcome to my channel. This is Random Guy on YouTube. Mastech Digital is a digital transformation and information technology services company headquartered in Pittsburgh, Pennsylvania, providing services to corporations across North America, Middle East, Asia, and Japan. Mastech is a microcap company with a capitalization of $160 million and trades on American Stock Exchange under the ticker symbol MHH. Mastech Digital has two main business segments, which are data and analytics services and IT staffing services. IT staffing earns much more revenue, but data and analytics grows much faster and has much better margins. Now, let's look at some numbers. Here are revenues in the last few quarters, so let's pull out a graph and plot exponential curve through the revenue. Data and analytics services revenue in the blue grew by 18% year over year. IT staffing revenue in orange grew by 7.4% year over year, and the total revenue in gray grew about 10% year over year for the last 5 years. Now cost of revenues and operating expenses. Operating expenses are growing on average 13% year over year, and cost of revenues 8.4% year over year. If we put it together, the growth of cost is approximately 9.3% year over year, which is less than the 10% growth of the total revenue in the same time period. So, with scaling, the operations of the company gains efficiency. Mastech provides non-GAAP earnings per share, which, according to them, should be better metric for the valuation than the GAAP earnings, but it doesn't seem to be more consistent to me, so let's use GAAP earnings. The exponential curve doesn't fit it very neatly, but if we use it anyway, it shows about 15% growth year over year. Overall margins are slowly increasing over time, but data and services margins deteriorated in the last year. The company acknowledged it in the last earnings call, and they are taking steps to mitigate that. They even closed 2 unprofitable foreign subsidiaries in Q3. This should look positively on Q4 earnings. Over time, I expect margins to get back up. Current 12-month trailing price-to-earnings ratio is 14.4, which is close to historical average for this company. At first, this doesn't seem like a great buying point, but analysts are expecting PE in 2023 to be around 9. It also has to be said that average PE ratio for IT services industry is much higher at around 23. Total current liabilities are around 27 million. Current assets are much larger, around 58 million. Mastech also recently finished repaying its long-term debt, and the company is in excellent financial shape. To summarize, for the last 5 years, Mastech showed excellent growth in revenue and income. Currently, shares are trading at very reasonable price, around 14 current PE and 9 forward PE. In case we really get a recession in 2023, shares of Mastech will probably get hit, but the company is in excellent financial shape. At this point, I would also like to mention that the majority of the business is owned by insiders and founders of the company, which I really like. Now, let's look at the portfolio. It was quite a good week for the markets again, but being up so much already, my portfolio took a bit of a breather. It still gained in dollar amount, and the gain is currently $66 since the start of the year. For the calculation of percentage gain, I used dollar gain of 66 and divided it by average invested dollar amount for the time period, which is 300. Total percentage gain for the last 5 weeks was 22%, which is so far fairly higher than Nasdaq fund with 16% and the S&P fund with 8% gain. Today, I am adding another 100% to the portfolio, buying 7.6 shares of Mastech at the Friday's closing price of $13.15. Full transparency, I do own Mastech Digital in my own real portfolio. Now, let me remind you that I am just a random guy on YouTube and not your financial advisor, and none of the content of this video is a financial advice. Thank you for watching and see you next time.